We are halfway through May of 2024, and the market hasn't gotten any easier to read. There is a big surprise that, quite frankly, I could not have seen coming. And if I had known, my predictions earlier in the month may have looked a little bit different. So let's dive right into everything that has happened so far, what we should expect over the next half of the month, as well as going forward. The item I'm going to focus on the most in this video is going to be the amount of new listings we did or didn't see so far in the month of May. So while mortgage rates came back down a little bit, and some could even be had under 7%, as of now, the date of recording of this video on the 16th, which may change, it is a pleasant surprise and relief that that happened. But inventory coming down 2% from the beginning of the month. The sole reason for that is the amount of new listings that we haven't seen. We're on pace right now, and again, you're going to see this in a little bit, to see roughly half of the new listings that we saw May of 2023. That's over 40 listings that, if all else was equal and we continued the patterns of roughly mirroring what we had seen in 2023, that would have resulted in inventory increasing by a pretty remarkable number. Even assuming that more have gone under contract, would have gone under contract, we still would have seen inventory grow instead of shrink, which was my expectation. So the basis for my predictions were apparently off. And I would like to try to figure out why that has happened. I'll cover more of that at the end. But days on market, very stable. Prices still roughly where they have been. And again, single family, some of you, if this is your first one seeing this, you're going to see that 1% down year over year for single family homes. And you may think, wow, prices are coming down. But again, I would encourage you to watch one of the last few videos where we go into depth as to why that happened. You're going to see on the slides here that it's really unremarkable and not big of a deal. It was kind of a 1 month causing it all to go a little bit sideways. And then that carried forward for almost an entire year because of how we track the 12-month rolling averages. So mortgage rate, again, most of these numbers are going to be the same from the video earlier in the month. The last month and last year are all identical. Inventory continuing to grow, even though it has reduced from where we were at the beginning of May, still lower than we were last year, or higher, I should say, than we were last year. Now, new listings, and again, here's where we fall off a cliff, right? That you see here all the way to the right, going from April to May. And if you start tracking backwards, that simply has not happened. That happened in 2022, didn't happen in 2023. And if you keep going backwards, you're going to see every other year, and I mentioned this in the first video this month, it seems to alternate where one year we go up somewhere between 10 and 20% new listings compared to the previous year, and then we go back, and it's a ping pong ball. And I went back before I hit record on this to see, is there any trend that we can pick up of, hey, look, if May, which seems to be the most volatile month of all 12 that we look at in unpredictability, but is there a pattern? If we have more new listings in May than the previous May, what happens the rest of the year? There's not a pattern that I could pick up on that. I wish there was. I'm still looking to try to figure out why it's such a volatile month, but I haven't come to a conclusion just yet, but I'm going to keep digging. Pending sales, we're on pace to see a slight decrease, roughly in line with the number of new listings that we haven't seen this month. And I'll cover that more at the end. But again, it still feels like a stable market, even though my rhetoric may have changed a little bit, thinking that I think we're going to see a slowdown in the fall. We haven't seen it yet as people continue to push to get here for the summer. And again, most of that will start to dwindle now that we are 2 weeks out from Memorial Day. That's when people really tend to hold off and say, hey, you know what, we'll revisit in a few months. Let's enjoy whatever vacation we have planned, or we'll rent for the year, whatever it may be. Closed sales, very, very stable, very strong, all things considered. Now, I sent this to a couple people who are looking for single family homes. You may have noticed, and again, there's a huge portion of single family homes out there that are new construction, and most of them are having trouble selling, or at least they've been out there for a very long time. You can see here the months of inventory. This is a direct relationship to, again, the amount of demand that's out there compared to the amount of supply, the amount of homes that are for sale that are single family. And again, most of those being new construction at this point. We are going back to approaching our highs in months of inventory, continually increasing. Fewer are going under contract, but more are hitting. And through a thread that I saw in another Facebook group, not tips for buying an OCNJ one, there are more coming. There are more new construction homes coming. So it's something, again, I'm going to have a very close eye on just to see what happens. The last time that I felt that we were heading in this direction where the amount of new construction was outweighing our demand that the market seemed to support for that, we ended up seeing some of these builders or developers offering some incentives, whether that's offering them now furnished or with a full price offer, 50,000 back in closing costs or upgrades or whatever it might be. I'm going to be on the lookout to see some of those things return if this trend continues. And again, prices still very stable, all things considered. You take out that gradual dip that we saw that was primarily due to one low month coming in and messing up our metric, it's still very stable there. So like I said the whole time, right, we're not going to expect to see real life prices drop in that sector at that time. And I think we should realistically start to see some incentives offered or some small reductions in price, but nothing clear and track style. So here we go with days on market again coming back down. So despite months of inventory going up, the ones that are selling are still selling fairly quickly. It's just there are a lot that haven't and are sitting out there for quite a long period of time. Condos still very, very stable here. And there is, once again, an explanation for that. And that is strictly due, in my opinion, to the lack of new listings that we have seen this month. Again, roughly on pace to see over 40 fewer than we saw in the same month last year. Prices still very stable here as expected. Days on market increasing slightly, not enough to be meaningful in any capacity. And now speed, my favorite. And again, this is new. If this is your first time watching this, this is a new metric that I created to help us figure out when trends are breaking as well as why. Two variables being the amount of new listings and the amount of homes that go under contract. Very simple. So here we have another 1.88 is our current pace for speed for the month of May. And all that means, again, is for every 1.88 new listings that we had in the month of May, we had one home go under contract. Now, if you compare where we are this May compared to last May, it is a decrease, which means we are moving faster in theory than last May. But that's not, again, the context here is important. I can throw these numbers at you, make whatever case, I would like to make, but that's not how I do this. I like to give you the context as to why things changed and maybe why it's, a smokescreen a little bit. So here, again, if we had the same amount of new listings that we had last May, we would have had roughly the same speed that we had last May. But because we have had fewer new listings and are on pace to have substantially fewer, that is going to cause our speed to increase. So this to me, even though it looks like, oh, yay, we're all balanced, everything is all good, it's due primarily to what I'm just mentally considering an anomaly that I think we should have had more new listings than we did. And again, May, looking at all Mays compared to all other months, year over year, this one is the most volatile and the one that really doesn't make a whole lot of sense as to what is going to happen with new listings in May. So we are going to, again, focus on the longer stretches here. So with our 6-month and 12-month, very, very stable looking. And over time, over the past year or so, things have really stabilized very, very close to that 1.7 to 1.8 range. And again, screams balance to me. It's just there's this balance that feels very delicate, could turn in a hurry. Now, mortgage rate wise, again, I no longer expect any changes. A positive CPI report came out for the first one in the past 4, where it actually reduced. Now, I'm not saying we deflated, there was no deflation, but the CPI last month was 3.5%, which means, again, things rose in price 3.5% compared to the same time last year. This one was only 3.4%. So it's heading in the right direction, and stock market reacted very favorably. The bond market reacted favorably. I just think there are a lot of people out there looking to celebrate too early. Call me a negative Nancy, a doomsayer, whatever you want. I just feel like one tiny fraction of a percent, even though, yes, it breaks the trend in theory, we're talking about a 0.1%. Not enough to get me excited and to change my mind. I still don't expect any rate changes this year. And quite frankly, again, if the Federal Reserve does that, I think it's just setting us up to really have a problem sooner than later. So I really hope that doesn't happen this year. Inventory wise, again, a decrease is normal. Based on everything that I have thought over the past month or so, I anticipated that we were going to break some trends, that we're going to see inventory rise closer to 270 by the end of the month. And hey, look, we still got 2 weeks. It could happen, but I am less optimistic. And it seems that we are still staying in this balanced place where we have been. And when I say balanced, and again, you'll see the term gridlock, I'll talk about that again in a second. One and the same to me. There's a good balance and then there's, a tenuous balance. And this is a tenuous balance. And it's because a lot of buyers, and again, ones that I'm working with, ones that I've spoken to, ones that friends of mine are working with as agents, they want to buy, but there's still this feeling that things are overpriced. And again, I second that. And because many buyers feel that way, right? Many buyers have held off. Many sellers are still feeling like we can still get the price that we want because inventory is limited and there's limited competition, supply and demand. You can't argue against that. It's just coming down to motivation. Somebody's motivation has to break. Either the seller says, you know what, I really want to move on. I'm willing to take maybe less than I expected to get, but still a very, very favorable number compared to any period of time. Or a buyer says, hey, look, I really got to get in this year. I'm just going to take the plunge, an extra 5, 10, 20, 50,000, whatever it may be, isn't going to, make or break me. So I'm just going to do it, make the memories with my family. So those are happening at the margins where those buyers are either saying, you know what, screw it, let's do it, or the sellers are finally saying, let's just move on and start the next chapter. Most people have decided not to budge. So we have sellers sticking where they are and buyers sticking where they are, and there's a gap between them, or at least a consensus is there's a gap between them. So that gridlock, again, I think is going to really stay for the next 3 to 4 months. Most people aren't changing their plans during summer, right? If you're a seller and you have rentals booked, you're probably going to hang out and collect that income. If you're a buyer and something comes available, let's just say that, you can't use during the weeks you would have wanted to because there's rentals booked or the owner won't close before that. Why? Why would you buy that? So you wait. So again, I expect summer to really slow down. I'm still going to be doing 2 of these videos a month to track it, make sure, right, that my assumptions are not getting the best of me, and see what the data has to say. Price wise, I think we are where we're going to be. Again, I don't expect any fluctuations over the coming months. And the fall is really our first chance, I think, to revisit and see what has changed, if anything. Yes, in theory, the Federal Reserve could come out in July and say, you know what, we are going to slash rates. That could have an effect on some buyers. It certainly shouldn't make prices jump, but I think it may make some of the current asking prices more tolerable for some of the buyers out there. But I'm not banking on that to be the case. So again, the updates will be shorter and sweeter, I think, but I'm still going to be coming with them nonetheless. Um, Question wise, obviously, I'm here. Any ways you want to reach out and contact me, feel free. Thank you to those of you who have been reaching out recently for not only watching, but for asking for help or asking for my opinion on things. I'm glad that you find my insights helpful, and I'm happy to help again. Those of you who have reached out recently, I'm excited to get to know you guys and help you work through this journey and to find the right fit on a timeline that works for you. So, with that said, thank you as always for hanging out with me. I appreciate you being here, and I will see you next time.